The IRS has a new option as of March of 2025 to help those who owe the IRS back taxes and need to get into a payment plan. The new option is called the Simple Installment Agreement, or the Simple IA. What is this Simple Installment Agreement, or Simple IA? This is a new payment plan option. It replaces the old Streamlined Installment Agreement. So you may see a lot of terms online about the Streamlined Installment Agreement. That has been removed for individuals. It's still in place for businesses, but it's been removed for individuals. Now, this allows taxpayers, individual taxpayers who owe up to $50,000 in the assessed balance. Now, the assessed balance is different than the total balance. The assessed balance is the balance at the time the tax return is processed, and that can include some penalties and interest. But there are, when you do not pay your taxes, there are accrued failure to pay penalties and accrued interest. That makes up the total balance. We'll go through an example here in a second. But you can owe up to $50,000 in assessed balance, which, by the way, is 95% of all individual taxpayers. And then you can pay up until the IRS collection statute expiration date, or CSED. That CSED is 10 years from the date the tax is assessed. So if you file a tax return on or before April 15th, 2025 for the 2024 tax year, generally the assessment date is in the first week of June. That's when the IRS statutorily assesses the tax. They have 10 years from that date, or 120 months, to go ahead and collect on those back taxes. Now, the good thing about a simple installment agreement, just like the old streamlined installment agreement, was that you can avoid a notice of federal tax lien. Now, you have to do this timely. The IRS can file a tax lien. They usually do eventually after they send a series of collection notices and you do not pay and you owe more than $10,000. Now, if you set up one of these agreements, the Simple IA, and you do it timely before that tax lien, you can avoid a notice of federal tax lien. Now, the old Streamlined Installment Agreement had some very specific terms. It required you to pay over 72 months, not like the new Simple IA, which will allow you to pay up to the collection statute, which could be up to 120 months, depending upon the timing of when you enter into that agreement. The old Streamline required you also to do direct debit payments between $25,000 and $50,000 to avoid the tax lien. The new Simple Installment Agreement does not do that. Now, when it comes to the Simple IA, let's show you an example so you can go ahead and apply that for your situation. So let's say we have an individual taxpayer, they owe for 2022, and let's say at the time they do the Simple Installment Agreement, there's 100 months left on the statute. Now let's say their total balance is actually over $50,000, it's $51,900. It's over that because the assessed balance is $48,000, and the assessed balance is the threshold for the Simple Installment Agreement. It was for the Streamlined Installment Agreement in the past also. So it's under 50, they qualified. Now they filed all their back tax returns, which by the way is a prerequisite for any type of payment plan for the IRS. You have to be in filing compliance. For individuals, that's the past 6 years. In 2025, as of April 2025, that would mean the 2019 through the 2024 return, assuming the 2024 is going to be filed, right? So that would be the past 6 returns. Now, in our case, our taxpayer does not have a tax lien filed yet, and they don't want one. So their answer is the Simple Installment Agreement. What they would do is they contact the IRS, or they can even use the online payment agreement tool, the OPA tool, online with their ID.me account login access. The OPA has been upfitted to allow for the Simple Installment Agreement. Now, the IRS here may compute a minimum payment here, and they'll give it to you over the phone. Use the OPA, it'll actually compute it for you if you put in an amount that's less than the minimum payment amount. Now, when you go ahead and get this done, a failure to pay penalty rate can actually be reduced. It's normally 0.5%, but when you're in an installment agreement, before it goes to IRS collection and you file the return on time, that failure to pay penalty rate drops from 0.5% per month to 0.25% per month. So you save a little bit on penalties in terms of its timing. Now you can make the payments by direct debit. You can make them online using direct pay. You can even pay by check with this Simple Installment Agreement. I often encourage taxpayers to set up by direct debit payment because it avoids a lot of defaults. Now, there's a setup fee to set up a payment plan with the IRS. It ranges from $22 all the way up to $178, depending upon how you pay and how you set it up. So the cheapest way to go about it is to set it up online and use direct debit. That's a $22 fee. That's fairly inexpensive and helps you, again, avoid default. Now, if you do all this before the IRS files a tax lien, no lien will be filed in here. This is a great new option for those tax debtors who owe the IRS current year taxes or back taxes. You can set it up directly online. Very simple to go ahead and do, and it allows you the most favorable payment terms the IRS has ever allowed under any type of its payment arrangements that it's had in the past. Again, the Simple Installment Agreement is the way to go. 95% of taxpayers can go ahead and utilize that. If you have any issues, just contact me. I can go ahead and assist you. Thanks.